How to pay zero personal income taxes legally and live the corporate lifestyle. One of the important and effective techniques to reduce your taxes to zero is to convert your personal expenses to deductible business expenses. In order to do that, you must own your own business. This is not complicated, expensive, or difficult to do, and the best way is to incorporate. Your business need not make a profit in order for your expenses to be allowable deductions. All you need to do is establish a profit motive. Under the Internal Revenue Code, a profit motive is presumed if you can earn any net income in any 3 out of 5 business years. The most dynamic and flexible business entity is the corporation, offering tremendous advantages that generally outweigh all other business structures. The corporation is the most commonly used structure in business today. A corporation is separate and distinct from its stockholders, directors, and officers. It is a separate entity. Once brought to life, this artificial entity has most of the rights and privileges that a person has. A corporation can own and operate businesses, hire employees, buy and sell goods and services, make contracts, rent office space, have checking and savings accounts, maintain retirement plans for employees, and can be sued and sue. The existence of the corporation is not affected by the death or bankruptcy of a shareholder, officer, or director. It cannot market its products, nor can it perform any of the physical tasks required to operate a business. You and those hired to work within the structure of the corporations do all this. The important point to remember is that when you own a corporation, the corporation exists as a separate entity or person. You can live anywhere you choose in any state or country, but it is the corporation that conforms to the requirements of the state which it resides in. You will soon find out that Nevada is the state with the greatest benefits for protecting you and your corporation. The only thing you will have to be concerned with when using a C corporation is double taxation. Eliminating or deferring profits through proper financial management can easily be dealt with this problem. Double taxation typically only occurs with large corporations who have several stockholders that need the profits distributed to them at the year end of the corporation. The owner of a corporation can decide at the end of the year what to do with the profits. If the corporation's owner or officers need the money for personal expenses, they can be paid a wage in the form of a year-end bonus or set up a retirement plan to expense as much of the corporation as possible. The IRS says that it is the responsibility of the taxpayer to lower their tax liability. They also say that a corporation can deduct any general related business expense to lower their tax liability. It can be achieved by using good money management. Individuals versus corporations. One of the major reasons individuals incorporate is the fact that as individuals we earn money, pay taxes, and buy things, but a corporation earns money, buys things, and then pays taxes. What would you rather do to pay for things with pre-tax dollars or after-tax dollars? There are tax savings. The myriad of tax benefits that can be achieved by utilizing a corporation outweighs those available through the use of any other business structure. For example, corporations are entitled by law to many deductions not available to individuals. Many of the tax benefits available to corporations can greatly benefit corporate owners. Even without considering these differences, you can see that at income levels up to $100,000, all else being equal, the corporation would pay less federal income taxes. This doesn't include the impact of self-employment taxes paid as a sole proprietor or of any state income taxes that may apply. It impacts the bottom line, which delivers more dollars, increasing sales, reducing costs, or cutting taxes. It may surprise you that a tax dollar saved is much more valuable to you than an added sales dollar or a cost savings dollar. A tax dollar saved is a full dollar retained in the business. The federal and state government takes a tax bite out of every other business dollar, whether a dollar that was retained by reducing costs or a dollar that was brought in by increasing company sales. Reducing the audit risk is very important. The minute you incorporate, your audit risk may be dramatically reduced. The IRS puts more emphasis on sole proprietorships than on small corporations when it comes to audits. The IRS audits 10% of all sole proprietorships and 1% of corporations with assets of less than $1 million. The IRS sees an individual operating as a sole proprietorship or those operating as a general partnership to be less sophisticated than businesses operating as a corporation. The IRS also assumes that due to the fact that they are operating one of these two ways, they are more likely to make mistakes on their return. Operating a business as a corporation means you have a higher sophistication level and are less likely to misrepresent items on your tax returns. In general, small corporations are less lucrative to audit because they are allowed more deductions and are taxed at a lower rate than sole proprietorships and partnerships. Living the corporate lifestyle as an officer or owner of a corporation, you should take advantage of living the corporate lifestyle. Why use after-tax dollars to pay for your automobiles, travel, computers, office equipment, certain utilities, and even your kids' college education, if these expenses relate to a business purpose and can be purchased with pre-tax dollars through your corporation? A corporation can be structured so that your company can pay for any expenses that have a business purpose. Why not use this to your benefit? Sports arenas rely on corporations to pay for the VIP boxes to watch their sporting events. As the owner of a corporation, you can win big by taking your clients and employees to these events and doing it all with pre-tax dollars. Or why not join the country club with a corporate membership and golf every day with no money coming from your pocket? Just make sure you take your favorite clients along and lock the date so that if you're ever questioned about it, you will have documentation to prove it. Many other business expenses also can be paid by a corporation. Education, legal and accounting fees, insurance, moving expenses, seminars, books, meals, entertainment, and much more. With these tricks, you will find you don't need to be paid as much salary and will have lower personal tax liability as well. Doesn't it sound like it's time to start living the corporate lifestyle today?